Welcome back, everyone. My name's Paul. I'm brand new to investing, and currently my portfolio is sitting at 48,110. And today is a special quick stock analysis on Shopify. Very heavily requested both on Instagram, Twitter, Discord. Everyone wants to know about Shopify at the moment. Now, if you didn't know, Shopify is the platform commerce is built on, according to Shopify themselves. Basically, Shopify is an easy way for businesses, small businesses, to go out there and release their products to the world and have an all-encompassing selling platform. So you can buy with Shopify, you can advertise through Shopify, marketing is there. I think they do websites, but I'm not entirely sure, if I'm honest. This company's been going on for ages. It's a Motley Fool favorite. There's loads and loads to like about Shopify, but recently the news has come in that Amazon will be putting their buy with Prime button on websites. Now, this could be a shock for Shopify. It could really hurt their earnings. It could hurt their market share in the future. The reason is because Shopify is basically an online store, and it's differentiated itself with Amazon by small businesses being able to take advantage of their own supply chain, and basically Shopify just gives an easy way to make the sales. Amazon, however, up until now, you've had to buy off their website. So if you were a seller selling your product, you would pay Amazon to store your product, and Amazon would completely fulfill everything. So in one way, Shopify is a really good thing, and in another way, Amazon is much better. And up until recently, they've been completely different. Amazon has now decided that it wants the websites, it wants to put its button on the website, so you as a customer can quickly click that, and hopefully as a small business, you can pay Amazon to fulfill that order and basically make all the payments, all the fulfillment, as in all the delivery, all done by Amazon, and you don't really need to touch the product. And recently, Shopify has been investing in the fulfillment side. So these two companies are very quickly coming together. Qualitatively, as in the story, what you have to ask yourself now is, who's going to win this battle? Is it Amazon or is it Shopify? Is there some world where they can coexist together, or as usual, does Amazon just want to take everything? My personal feelings as somebody who is very third party, I'm not in Amazon or Shopify at the moment, but my third party feeling is that Amazon will win the fulfillment side. On the Shopify side, Shopify's benefit is that consumers, as in small businesses, are more likely to choose Shopify because it doesn't use your data. So Amazon has a history of taking your data, taking your product. So if you've got a generic product that you're trying to sell on your website that you don't own, but Amazon can take, they will use your data to see how profitable it is, how much you're selling. If you're selling a lot of it, Amazon might just find the same product, put it on its shelves, and do it for 2p cheaper than yours. And that is the downside of selling on Amazon. Amazon always has control over pricing power, and if your product's doing well, it will take the money off you. Shopify says it doesn't do that. But I do wonder, with the fulfillment side of things coming in, whether Shopify would secretly try and do something similar. I feel like the profits or the profitability of that is just too tempting for Shopify, and it may just go against its own morals sometime in the future. At the moment, so far, Amazon is that big, horrible conglomerate that takes over all small businesses, and Shopify is the side that helps the small businesses, and it's doing very well in that fact. The main, or probably only moat that I can see with Shopify is its stickiness. So if you're a small business who's built its whole commerce platform on Shopify, you're unlikely to go somewhere else if Shopify decides to raise its prices. This is pricing power, but also stops companies from going elsewhere on their business. I know how important this is because I use one of Shopify's main competitors, Wix, for my own website. I know it would be very, very hard for me to now. It'd be such a ball ache for me to go out there and try and make this website with somebody else. Wix, in case you didn't know, is becoming a full payment platform, website maker, marketing, design, everything. So it's doing what Shopify is doing plus a little bit more. Shopify arguably does it a lot better though. So it has a good moat. It's a good business, but there may be signs of their business model getting a little bit weaker or their market share being etched away. And since the end of 2020, Shopify has lost 72%. Analyst expectations are anywhere close for Thursday. This is going to get a lot worse for Shopify. Currently, Shopify is sitting at 89 times PE. Wow, that's ridiculously heavy. As you can see, in 2022, analysts estimate that Shopify will be earning a lot less than it was in 2021. That's not necessarily due to a lack of customers or less customers buying things. I think if we look at their sales or their projected sales, we will probably see that going up. But in 2021, I think Shopify made an acquisition of a firm which pushed their earnings up a little bit higher than expected. So this year it's expected that Shopify will be earning a lot less, not just due to the pandemic slump, but more due to this loss in basically an accounting earnings. Believe it or not, free cash flow positive, but again, it's doing a lot of investments into the fulfillment side of its business right now, so we can expect free cash flow to be a lot worse in the future. But that doesn't mean that the business is bad in any way. It just is following a similar model to Amazon, but it's going to be following this sort of trend in the next couple of years. Maybe operating cash flow might be something to look at to compare with on fast graphs rather than free cash flow right now. As you can see, operating cash flow looks like a much better metric to follow here if you are following the positivities of Shopify. One important thing that we've always noticed with the FANG stocks, the top flying stocks over the past decade, they've always followed their operating cash flow. Amazon is very similar to this because it doesn't make any profit, or it purposely keeps its profit low because it's always investing into different things. It's always trying to grow. It's one of those spawning agencies. Whether we think that Shopify is a spawner, I don't know yet. Big growth rate coming into 23, 24. That is all analyst estimates. No idea where they think that's going to come from, but most analysts have this built in. From a fundamental point of view, this is where Shopify really sells on its price to sales. Growth of sales is going ridiculous here at a 50% growth rate in revenue. This has led to 11 times price to sales, which is high. 4 is probably price to sales that most people look for. Anything above 4 is a little bit too high. Anything below 4 is damn good on a price to revenue basis. But overall, most people think that price to revenue is a terrible. Most value investors think price to revenue is a terrible metric to use. However, you cannot deny that Shopify is on a serious growth in its sales, which obviously shows the difference between those earnings that are dipping next year because of the acquisitions and the big boom in sales. It shows that customers are still there, customers are still growing, and they're paying more year on year for the service. Current customers are adding on. It's the same with me and Wix. I've got my website on Wix. Eventually it's going to be my e-commerce platform. It's my social media platform right now. There is a hell of a lot of things which I will be adding to this website eventually, and if Shopify customers are in there, I know exactly what they're going through, and they're going to be squeezed pretty hard. That is good for Shopify, and it shows that this growth is going to continue. I won't be using free cash flow growth right now to value this company. That's simply because this company does not give back to its shareholders. It doesn't pay a dividend. It doesn't buy back shares at all. In fact, it dilutes shares quite a lot through stock-based comp, something that might be needed to be considered. But it is a profitable company, so I'll try and use some earnings to get an idea of where we should be buying Shopify. Bringing the lines in a little bit here, you get a 70% growth rate. That's a little bit high. Just check on the bottom. We've got a huge anomaly here in 2020 of 765% growth in earnings rate. Let's skim that off because I think that's a bit much. But then we end up with a 14.5% growth rate in earnings, and this would be a P of 15 down here, right here. This makes Shopify stupidly overvalued, especially for the short term. To 2027, you need to in order to make any profit whatsoever on Shopify, according to a value investor model based on earnings, you need to have a PE of 70 still in 2027. That is, I have no idea how likely that's going to be. You will have to make the decision on that one. If it manages to hold a PE of over 35, you'll lose 6.22% a year. And God, if it goes down to a PE of 15, for minus 20% a year, although you've already lost 70% on Shopify so far, so it's open for anything at the moment. Overall, I think Shopify is not one for me to invest in. I think there are risks there now with Wix coming, and Wix is one company I really love. I think that is eating into a lot of market share, and Amazon, the big behemoth. So Shopify is being squished from either side right now. That is going to lead to slower growth, and of course, more competition is going to squeeze those margins as well. If you really want me to give you a price, I'm just going to throw it out there. $102.59 would be the price that I really wanted to buy it. That's minus 77% from where it is already, and it's already over 70% down right now. This is all because the story of Shopify now is a lot worse. I think the earnings on Thursday are going to be pretty terrible. That's why I think, who knows, but the last earnings they missed, and it's very likely that they're going to miss on these earnings as well, because Amazon and things have missed also. It really shows there could be a lot more pain coming for some of those big overvalued stocks in the stock market. But remember, you still could have bought this stock right at the start for 10,000 times multiple on its earnings, and still made 40% a year. You'd be up 400% right now. So these stocks do really well. This is a really good environment for them. There is a growth platform definitely there for Shopify. This could be super long term, but it may be in the short term that you could get some really good deals on this one.
The sucker's going up.